Hey Harvesters, and welcome back to the channel. It has been way too long since I've made my last update video. I think the last time I made a video was September 10th, which I think was what, 5-6 weeks ago. So today's video is going to be very generic wave top, kind of reiterate the strategy I'm adopting so I can generate my income, and just kind of hit the high points of where my account was September 10th to where it is currently today. I was doing the exact same trades that I normally do. Kind of the two rules that I've been living by. Whenever I buy shares, I don't sell below my cost basis, and then I invest into good investments. So I was keeping those two principles at heart, and therefore let's dive into the numbers. So looking at the Robinhood screen, my account is at $207,995. Wow, it's almost at $208,000. Back on September 10th, my account was at $191,000. So we've appreciated about $16,000 within that month period, that 5-6 week period. But let's just take a look at the month for what Robinhood has to show. So yeah, we're up 4.81%. And then let's take a look at the 3-month mark. So looking at September 10th, right, my account was at that 191,000. And then if we progress, the 5-6 weeks forward, now it's at that 207, almost $208,000. So my principles are steadfast. They are working. They are consistent. They're not super sexy, right? I have a couple of buddies that like to trade like the actual options, like buy calls, buy puts, and they're trying to wheel and deal premium that way. I don't like doing that way. I like owning the good investment and then running covered calls against that. So the only downside to this strategy is you need to have the upfront capital to be able to own 100 shares of an underlying. And then with that being said, whenever I buy the 100 shares of the underlying, I keep them in their own specific pillars and their silos. They're independent of each other. So I don't like to dollar cost average. I don't like to also incorporate premium to the price I buy in so that I can choose a better premium. I don't do any of that fancy wizardry. I just like whatever the price I bought my shares at, that's the price I won't sell. And we're going to keep everything nice, linear in a column. It's not sexy. There's going to be people that say there's a better way of optimizing it. You're missing potential premium on the table. But we're going to head over to the spreadsheet in a second here, and then I'm going to show you my results, and then they will speak for themselves. Okay, guys, now that we are back to the spreadsheet, let's look at some of the data. So I showed you the Robinhood perspective, but then I'm also going to show you my Excel spreadsheet. They're both the same information, but for whatever reason, I like the cleanliness of the Excel spreadsheet because I'm able to look at each individual trading day as how much premium and appreciation I made. Was it a good day? Was it a bad day? And I can basically point at the metric and be like, this is good or this is bad. Versus Robinhood, it's all kind of all blended together, and you have this data, but you can't really make an assessment off of it. So back on, oh, that's not what I wanted. So back on September 10th, I made $42 of premium. So nothing too exciting there. But I just want to reiterate the point where my account was at $191,000. And throughout that period, I've been trading back and forth. Some days, one day is a $42 day, which is, not that great. But then the next day, rebound back, we're at $329. Next day, $603. Next one, $776. I'm not going to go down every single number here, but you basically get the point. I'm running covered calls, cash secured puts every single day. Sometimes the market's up, sometimes the market down. Because if you look at September 9th, my account was at $201,000. Then all of a sudden, we're down $10,000 for whatever reason the market, hedge funds decided to sell out. Somebody talked about tariff news. It doesn't really matter. But if you look at the consistency from this $191,000 mark, we're trading in and day out, same thing consistently every single day. And it's not sexy, but the numbers, they keep growing and growing. So 197,000 back down to 195. 197, we're at 200 again, woo! And then we continue forward, and then where we at today on October 17th, we're at $207,970. So we've locked in since, I moved away from high income ETFs like ymax, yieldmax, what are the other ones? Roundhill, xdte, those type of funds. Since I got away from that, my account has increased about 40.22%. So if that is a crazy amount of gain in that short period of time. If you look at the QQQ during that exact time period, I'm actually outperforming it. I'm not advertising that I'm going to be outperforming QQQ or SPY. This just happens to be the numbers that I am generating trading this way. I still think the buy and hold is going to be a little bit more sexy. But the reason why I'm doing this strategy is eventually I want to live off the income generated from this portfolio. And it's always good to have some money into long-term holdings, but ideally for this account, I want to be able to use the money in the next 5 to 10 years, either so I can retire and don't have to work anymore, or so I can enhance the quality of life if I want to, buy a better house, a better car, pay for my kids' education. Those are the different types of things that you can use this money for. Retire faster. It's whatever you decide to do, but for me, it's just a mechanism so that I can generate wealth faster, and for me to reach my financial goals a little bit quicker. All right, guys, the other major change that I have done, since the last update video is I've stopped putting money into my 401k. That's not exactly accurate. I am putting enough money into my 401k that meets the company match. Anything outside of the company match, I'm then going to put into my normal brokerage account in this Robinhood. So why did I do this? The way I look at it is if you put money into a 401k and into a long-term holding into like your Robinhood account or your brokerage, if you don't buy and sell the asset, they're really the same thing versus the 401k keeps money tied up and you can't touch it versus your brokerage. If you're going to need the money, you're able to then use it or you can borrow against it. So I decided, hey, my goal is to retire earlier. Why would I have my money tied up into a 401k? See, I'm 31 years old, about to hit 32 in the next couple of days, turning into a dinosaur. One of the guys I work with told me about this. And it's like, if you're really not buying and selling in your brokerage, there really is no tax advantage. Yeah, whatever fund you're in might have a dividend and you're going to have to pay the normal like dividend rate tax on it. But that's really the only tax benefit. And the dividend rate is going to be so small because if you're investing into VU or SPY, it's basically it's negated. So from now on, I'm just going to take about $2,000 that were supposed to go into my 401k, and I'm now just going to put it into my brokerage. And then I'm going to specifically put it into VU. The reason why I'm not putting it into SPY or QQQ is because I want this to actually be my long-term holding. Like the money that I'm going to put into VU is the same thing as the SPY, S&P 500. I don't ever plan on selling or buying or running covered call options against this fund. I'm just going to use that money so that I'm able to borrow against it so that I can run cash secured puts in my Robinhood brokerage account. So therefore, the more money I'm putting into this account, it's going to be a long-term holding. As long as I don't sell VU to realize short-term capital gains, it's the same thing as the 401k, except I'm able to use the money whenever I need it versus, the 401k, you have to wait till 59 and a half, or if you want to wait till 55 and get penalized, whatever. I don't know the exact, the details behind it because I haven't really looked into it. But the 401k is just a mechanism for the government, for people to put their money in, park it in there so it doesn't have as much volatility as people just buying and selling it their own way. So therefore, that's the way I'm moving forward. I'm going to be putting about $2,000 a month into this account. That's probably going to be the only money I'm really going to be putting into my Robinhood. It's just that VU money. So yeah, that's really the only update. So let's head down to just talk about the details. In 2025, basically back on April 11th, I have realized either through premium or appreciation gain about $56,898.79. And that is a gain of about 40.22%. And then on this right-hand column here, I have been tracking the daily change in value in my account. We're just comparing it to the SPY here. So when is this? Since August 1st. Yeah, so since August 1st, my account has gained about 20.41%. And since August 1st for the SPY, it's only up 5.17%. So this is for a multitude of factors. Some of it I was investing into individual tickers, but mostly I was just running covered calls and cash secured puts on the QQQ. And it's very evident that I am outperforming the SPY because every time the market stays neutral, goes up, I'm making money. If the market's going down, I'm also making money. So that's why I'm able to outperform the market. I don't know if that's going to be the case long-term or like in a major recession market. But as of right now, from the data that I have gathered here, I'm outperforming the S&P 500 just with my own trading strategy. So let's scroll down a little bit. So my trade win percentage, I'm winning 98.47% of my trades. I had 129 winning days, 2 losing days, and we have traded 131 times this year. I'm only going to hit about 180, so I missed out about 70 trading days because I was investing into high income ETFs, realized that they're hot garbage and they get absolutely slaughtered during a correction market or any type of downturn. I decided, hey, there's got to be a better way. Could I just run these options myself? And there is. And this is the exact result of my own trading. There's about 52 trading days left in 2025, so we have plenty of time to make more money. I'm averaging about $434 of premium per day. Man, when I first started this back in April, I think it was like $150 to $200. And the fact that it's at the 400s now, that's quite crazy. Well, premium is a strong word. It's premium and appreciation. So for the average weekly premium that I'm making per week now, it's about $2,000. Back in April, I think it was like $600. So we are, developing the process a little bit more efficiently. So everything's going pretty good there. And I've definitely noticed the range is somewhere between about $1,300 to about $1,900. So that's a pretty good range. Some weeks I might get $700. Some weeks, one of them was negative, but that was more so because of investor error than it was just staying true to the process. If I stayed true to the process, I wouldn't have had those errors and I would be trading at 100% now. But, sometimes you have to be bit by the snake. Moving forward, looking at the average yearly premium, this number is going to be an estimate because for 2025, I'm not going to have enough data. I'm not going to trade a full year's worth. So I'm just, projecting based off my trading results, what a year period would look like. So for a year period at my current, trading levels, I would make about $105,000 of appreciation plus a premium. And that's a return of about 71%. That is absolutely wild. And from what I've noticed, this percentage range somewhere between 49 and 71%, as I've been tracking my progress. But I will say this with a caveat. Some people call it out for like the new investors. I have a small sample size. I've only started running my own covered calls and cash secured puts back on April 11th. So the data size is very small, but the more and more information I collect, the more accurate this data is going to be, the more, correction markets, bear markets, bull markets, all of it's going to even itself out in the long term. And then we'll see what the actual results are, but you kind of have to watch the videos to see what the progress looks like. So if you're asking me, that's actually a very good return. Looking at what 2025 might look like. So far, we made about that almost $57,000 of income. I'm a high income earner, so I'm going to get slaughtered on taxes. I really haven't looked into the how to get more tax efficient. That's definitely something I should probably start looking into. But once you take the taxes away from my income, I should have around $188,000. This is also without including, 52 more trading days. So these numbers are going to be different come, December 31st, 2025. If you look at the net gain after taxes, about $36,000, and that's an actual percentage of 25% versus, the 50 to 70% we were looking at earlier. So that is pretty good, guys. I love where this, project is going. It's crazy how simple this is, but then people still refuse to run these trades. They're not sexy. They're not super exciting. They're not going to change your life, but it's just the consistency of doing it every single day, day in and day out. You're going to have good weeks, great weeks, bad weeks, but end of the day, long term, this is going pretty well if you were to ask me. So let's take a look at the week over week basis. So let's look at, September 8th, that 10th time frame when I stopped making videos. That was a monster week. I made $7,278. I think I was invested into Oracle running cash secured puts that were paying me like almost like $400 to $500 a contract, which was absolutely wild at the time. But then the week after that, definitely chilled out a little bit. I think I was still dealing with some of the premiums. So it was a $4,786 week. The week after that, this is more so probably my actual average, about $1,700. That's what I like to shoot for. I usually like to shoot for $1,000 or better, but somewhere between $1,200 and $1,700 is usually a nice touch point for me. I think that's a success because if you about $1,700, that's like what a percent of my account, maybe a 0.8% of my account. If you get that for 52 weeks in a row, you're golden. And then, we have that 1700, 1200. Last week I hit $2,500. And then this week, or this past week that I just, we just finished here, $5,468. So some of that was premium, some of it was appreciation gain. And the way I operate my covered calls is I'm pretty aggressive in my covered calls because the market's so high right now. I'm fine with getting my shares assigned. I don't ever roll my options when it comes to my covered calls. So say, for example, I had a covered call at like 605. So say I bought in at 605 and then I would choose a strike price, usually about $2 away at 607. I would lock in the premium. And if the market shot up, I would lock in $200 appreciation, do that on 4 contracts. That's $800 of appreciation gain plus about $100 per contract. That's how I'm making so much money, is because I'm capturing all those little appreciation gains plus the premium. You compile it together and then it's an actual good result. When it comes to running my cash secured puts, I'm a little bit more conservative. I choose deltas in the 0.2 to 0.3. And I'm actually looking for a good strike price to buy in at, because then I can turn it around and then sell covered calls and then make a ton of money on the covered calls. And I'll dive into it once we start talking about what I plan on doing for tomorrow in like the Robinhood screen. But let's continue on hitting the highlights. So they, at the end of September, which was a crazy monster week. This is more money than I make in my day job. And I was just trading for 15 minutes in the morning every single day. But for the all of September, I made about $15,061.96. That is crazy. And for October, we're doing just as good. We have about 2 more trading weeks left in October, and we're already at $8,821. That's wild. And I can't wait to see what the rest of October is going to look like. It's interesting because usually from me watching the market, September, October is usually like a red period, maybe even November. And then it's kind of been neutral to the opposite of what I was expecting. So I don't know. Interesting. But yep, for the yearly tracker, as I mentioned, we're at $56,898.79. So yeah, guys, everything is going just according to plan. Premiums are doing good. Appreciation is doing good. You really can't ask for anything better. Yeah, it's not sexy. Yeah, it's not a home run. But yeah, they're base hits and we're winning every single day. Let's go. I don't think I'm going to go over my individual trades because we missed so many, but maybe I might highlight what I did for Friday, where I made about $1,500. So let's talk about what I did. The first thing that happened on Friday was Robinhood decided to pay me a bunch of cash, because whenever I leave some of my cash available, Robinhood will pay me some interest. So I made about $240. They just paid me the cash. I don't know why it was in the middle of the month, but I'll take cash wherever I can get cash. So moving on to the actual trades I did. So I had 400 shares of QQQ going into October 17th. So I bought in at the 597.80, the 601, 602, and 604. And kind of what I highlighted earlier, the first rule, I don't sell below my cost basis. I don't care if the market's turning red, you had bad premium for a couple of days. The only way so you can guarantee that you don't lose money is you don't sell below your cost basis. So, and the way I look at these individual 100 shares, these are different silos of cash. So these are independent of each other. The fact that I bought in at the 597.80 is not going to change my strategy versus me buying at the 601. I'm going to trade differently for this 597, trade differently for this 601. Some of it might overlap. Ideally, these are different sets of money. I don't dollar cost average. I don't add in premium so that it can dilute the gain. I just keep it as this silo of money, 601, and then I won't sell below that cost basis. And that's why I've been so successful. I don't dollar cost average. I don't put it all together. It is just too much work. I rather just keep it each individually nice, neat, and clean. So the first one bought in at the 597.80. I chose a strike price at the 602. So what does that mean? I had net profit from 597.80 to 602. So that's about $420. And then the premium was $141. So if you combine the $420 appreciation gain plus the premium, the $141, off of that one trade, I made $561. That was crazy. That was nice. Then these next 3, these were actually assigned after some cash secured puts that I ran on the 16th. So I bought in at the 601. I had a sold price of 602. That's the strike price I chose. So I had a $100 of appreciation gain. The premium was also $141. So at the end of the day, $241 if you combine those two numbers. Same concept for this 602 QQQ strike price. I didn't have any appreciation because 602 and 602, no allow. So no appreciation for this specific option, but I made $166 off of this premium. Because I decided to run a couple at different times, and when I happened to run this specific premium, it was a little, or this option was a little bit higher. Lastly, the 604 price I bought in, I chose the 605 strike price because I wanted to, capture a little bit of appreciation. And luckily, I wouldn't say luckily, but I did not get any appreciation gain. This contract expired worthless, and I made $81 off of it. And so this is where I make a little bit of extra money. So for me, Robinhood gives you the ability to run cash secured puts off of your margin balance, or basically off of your cash balance. So ideally, I was able to run about $120,000 using Robinhood margin, but I wasn't actually incurring margin interest because I didn't have these shares assigned. I basically was using Robinhood margin as collateral. I made an upfront premium, and because the cash secured puts were not assigned at the end of the day, I didn't realize any cost to me, but then I made premium off of it. So let's dive into that. So for QQQ, I chose a strike price for my cash secured put at this 594. Basically what this means is if the market were to go down to 594, I'd be obligated to buy 100 shares of QQQ at this 594 price. So basically we need $59,400 worth of money so I can buy this. So what did I do? I used collateral so that I can run this option. I didn't have the cash. I used Robinhood margin, made $154 of premium. At the end of the trading day, the QQQ did not go down to 594. So I made $154 using, not using my own money, but using Robinhood's money. So I locked in $154. Same concept for this 590 strike price. If QQQ were to get assigned at this price, these are very good buying points for me. So when I run my cash secured puts, I'm not really looking for the premium. I'm looking for good buying points. What happened to be, I'm pretty sure like earnings are around the corner, so the premiums are going to be a little bit higher. The volatility, implied volatility is going to be higher. So therefore, that's why I'm making a decent money off these premiums. Most of the time, this probably would be about half or 75% of what this value is. Yeah, but for this 590 strike price, I made $72. It expired worthless at the end of the trading day. So I made about $220, $226, not using my own money, but using Robinhood's money. None of it was assigned. If it got assigned, great. I would just sell covered calls and then try to offload the shares as fast as possible. So yeah, at the end of the trading day, $1,515.70. We had a monster day. And then going into Monday, October 20th, I only have 100 shares of QQQ available. So then I have to figure out what I want to do. So let's head over to Robinhood and start talking about some of the things I might be doing. Okay, guys, we are back at Robinhood. Account is, it's actually at 208,000. Woo! That's an all-time high for me for sure. Well, let's take a look at the account. Right now, I'm doing one speculative play on Amazon at this 220 call. It hasn't been doing too hot, so that's why I don't go heavily into running my own buy call options. Just running covered calls and cash secured puts is the safest bet. But sometimes I like to use a small percentage of my portfolio, maybe like somewhere between 1 and 5% for something speculative. I saw Amazon was at a nice price, decided to buy a call for a leap about 1 year out. So we'll see if it plays out. Once I make like 5% off of it, I'm selling out for an easy couple $100. But ideally, I have 100 shares of the QQQ. Head back here. 100 shares of the QQQ. And then, like I mentioned, I bought about $2,000 of VU. So this VU, I'm not touching. This is a silo of money that is just going to help me build my portfolio so I can borrow against it. That is the only cash I'm going to be using. Everything else, I'm just going to will be the money I'm generating from running my own options. So let's look at my buying power. So looking at my buying power, I have about $590,000. I have $143,000 of cash available. So I could probably I probably can buy about $200,000 or not 200. I can buy 200 shares of the QQQ without incurring any margin costs. However, I don't mind having a little bit of margin. So I tend to run like 400 shares of QQQ. That's what I've noticed. I have my best amount of money I'm making. Anything more than that, I really don't like to do. So looking at these futures, so this is how I run my cash secured put money right now, right here, is once you own shares of like QQQ or whatever, you're still given if you have events contracts enabled in Robinhood, Robinhood lets you to borrow your cash value in collateral for cash secured puts. So what does this mean? So since I have about $200,000 in my account, Robinhood let me borrow like 80% of my cash value so I can run these event contracts. So right now I can run probably 3 cash secured puts on QQQ right now. So that's probably what I'm going to do for tomorrow. Unless, I see the QQQ drop super hard, before tomorrow morning or somewhere in the pre-market, I might just scoop up 100 shares and just run a covered call. By deal, I'm probably just going to run 3 cash secured puts. So let's go over to QQQ and look at what the cash secured puts look like. Man, the QQQ is going hot right now. Interesting. Okay. So let's head over to trade QQQ options. To run a cash secured put on the QQQ, you press this sell put button. Anytime that you as an investor want to be making money, you press the sell button. If you want to actually put money up front to buy something, then you hit buy. Robinhood makes it super simple. But let's look at these cash secured puts, sell put. Let's look at the QQQ at this 605.64. So ideally tomorrow, I'm probably going to side with trying to get a better price for my QQQ shares. So ideally, even though some of the premiums are high here at this $321, I do think with the uncertainty of the whole tariff thing coming in November with China 100%, and I would prefer to get a better buying point for my cash secured puts versus a higher premium number. So right here, this premium number is what investors are going to be willing to pay you for you to be obligated to buy 100 shares from them at that specific strike price. So right now we're at this 605.59. I'm going to be honest. I like these premiums here at this, $116, $100. This 597 strike price looks pretty good. Let's look at the delta. Yeah. So whenever I run cash secured puts, I'm very, what I've noticed is I'm choosing deltas between 0.2 to 0.3. If you're not familiar with what a delta is, that's the likelihood of the option executing. So if I got this 597, that would be a great buying point. So I would make about $100 a premium. So if I decided to run 3 cash secured put contracts like that, I would make $300 a premium. That takes 5 minutes of work, and then you're done for the rest of the day. You don't even have to look at the market. Due to the nature of some of the work I do, I don't have my phone around me. I don't have stock charts up because I'm super busy throughout the day. I like this level of trading because you don't have to monitor anything. I don't ever roll my options. If something's going to get assigned, it's going to get assigned. If something's not going to get assigned, it expires worthless. That's totally fine. But that's the reason why I like running covered calls and cash secured puts. You don't have to be monitoring the market for a huge uptrend or a huge downtrend. Guess what? I lock in my money and I don't have to worry about it. Sure, I might miss out on the potential to lose money, but if you guys saw from my Excel spreadsheet, the results speak for themselves. Yeah, you're missing out on some potential profit, but end of the day, as long as you're consistent, you're actually going to outperform the market, which crazy enough, that's actually what I've been doing. That's not what I'm trying to sell here. I'm just trying to sell the consistency point. I'm trying to sell the, buying good investment and just do the same thing over and over again. It's not sexy, but it works. But it's actually outperforming the market. It's crazy to think that that's how it works. So tomorrow I might run 3 cash secured puts on this 597. If I want to get first skiing wild, maybe this 598, make another $16. We'll see. So that's pretty much really what I want to do for tomorrow. I do have 100 shares of the QQQ. So let's take a look at what a covered call would look like. So if anyone doesn't know, a covered call is where you own 100 shares of an underlying, and then you basically you sell the right for somebody to buy the shares at a specific price. So someone's going to pay you an upfront premium to lock in buying your shares at a price. So let's look here. QQQ is currently trading at this 605.85. My buy-in point for these 100 shares is $604. So even already, if I were to choose this 606 strike price at $225 a premium, I'm already up, $200 of appreciation. Plus, I'm also going to be up $225 a premium. So that one trade, I'm going to make $425. I will say, usually the pre-market or like the day before market, the prices are about 75% higher than when the market actually opens tomorrow morning. So this is probably be like 150 tomorrow. But take a look at what this 607 looks like. Delta. I think for tomorrow I would be fine. So this is where it's just up to whatever your strategy is. If you don't actually want to sell your stock, you can choose a strike price that's further away. You can lock in some premium. That's great. But for me, I don't mind getting my 100 shares of QQQ assigned away on a daily basis. That's fine. I buy back in the next day, or I have some cash secured puts assigned so that I can own the 100 shares. So let's look here. I think 606 is a little too close to me. So I think I might just try to lock in this 607. So yeah, between running, so I would lock in the 607 price. The delta is about a 0.34, which means there's like a 34% chance of this executing. So I'm definitely liking this, making sure this is a daily. Great. So for tomorrow, I'd probably run those 3 cash secured puts, make me $300 plus this $175 covered call. We're already at $475, and that's not even accounting any appreciation if my QQQ shares go higher. So yeah, guys, tomorrow's looking to be a pretty good day. Usually it's going to be pretty much at my average at that $400 mark. So yeah, that's pretty much what I have for you guys. Let me know what you think in the comment sections. I'm glad to be back. I'm glad to be making videos, and I'll try to be a little bit more consistent. If I can't make the videos during the weekday, at least at a minimum, make a weekly update video. So I'm going to be trying to do that for you guys. Have a good one. Stay harvesting, stay locked in, and let's get after it.